Hi, everybody. I'm Diane Brady. I'm here with my colleague, senior editor, Amy Feldman. We're talking about the next billion-dollar startups. Good to see you, Amy. What year is this? This is number 9?
Hi, Diane. Right? Good to see you. It is number 9. It's the 9th year we've done this list.
So I'm assuming the trends, AI has got to be one of them. What really shaped the list this year?
We do see a lot of AI and data companies this year, as you would expect. We also see, interestingly, a number of companies that are doing what you might consider the boring back-end work, the stuff that needs to be done.
Boring but important.
Boring but important, exactly. There's maybe a little bit less glitz than when the market was bubblier, and a little bit more reality. We're going to help companies do what they need to do.
Before we get into this, just the methodology as to how you spot, is it that they are on a high growth trajectory? Because part of what this list is about sustainability, right? In terms of, so how do you judge who gets to be on the list?
So our first cut, first we get a lot of nominations. Our partners at TrueBridge help us to get nominations. We got over 200 nominations this year. And the first cut is an analytic data cut. So we look at not just valuation and valuation growth, because that could be a blip in the pan, but revenue and revenue growth and employee growth, and try to really find companies that are not just growing right now, but are going to continue to have staying power over time.
And that billion-dollar metric, that is a billion-dollar valuation, revenue, just to be clear to people.
Billion-dollar valuation.
Right. So let's talk about the list itself then, and who are some of the notable names you would flag for us?
We have 3 companies that we're featuring this year. The company that we featured in the magazine is a company called Monarch Tractor, and they do autonomous electric tractors, which, as you can imagine, is a really interesting thing for farmers. It might sound a little pie in the sky, but it's actually not. They did $22 million in revenue last year, and they're expecting to triple to quintuple it this year.
Wow.
Yeah.
You know, one of the things that's interesting, you mentioned a company like Monarch. I would think that it's hard to disrupt the Caterpillars, the Mahindras of the world, but yet these are companies that are disrupting the big players for the most part. Is that fair to say?
They are, but also in some cases, like in Monarch, they're also working with the big players.
Okay.
So they have a licensing deal with CNHI that makes the Case and New Holland brands, which is not quite as big as Deere, but still quite large.
Right. So what are some of the other companies too?
We've also spotlighted Pendulum Therapeutics, which is a probiotics maker, really riding that wave of people being very interested in the microbiome and figuring out how that impacts their health. We also have a more speculative company that we're featuring called Hermeus, which is trying to do hypersonic jets, but has revenue already from its work with the Pentagon. And then the 4th company that we featured in the magazine is called Jellyfish, and it's trying to be Salesforce for engineers. So engineering teams are having trouble having visibility, having the company to understand what they're working on, and it's got software, data-driven software to help figure that out.
It's funny, that seems like one that would really tap into the zeitgeist a bit as to why engineering teams now need more visibility in their companies. It used to be they didn't care too much, but now they do.
Absolutely. And as these guys said, engineering used to be this backwater, but now everybody has engineers. It's this very strategic, very important part of your business and of more businesses. And you really need to have visibility into what's happening.
So Amy, I'm curious, this is a list of 25 companies. There is a vast ecosystem out there from which to choose. So how do you pick?
That's true, Diane. There's about 50,000 venture-backed companies in the U.S. Only the smallest number of those will ever become unicorns, and we're trying to pick 25. We really start by getting nominations from as many places as we can. Our partners at TrueBridge, who've worked on this list and also work on the Midas list with us, go out to over 200 venture firms and get nominations. We go out to CEOs and companies that have been on our radar for the year and ask them to apply. And our social team, which at Forbes does great work, goes out and drums up as many nominations as it can. So we get over 200 nominations. And then, as I said before, we start with this data analysis. We get them to send us quite a lot of financial data that we can look at to see how they're doing.
Are there ever companies that are hesitant to be on the list? Now, none of these are stealth mode, obviously. They're on their way to being unicorns. But I would imagine some companies don't always want to be on the radar.
Some companies don't, and there's always companies that, could be, that we might want to be on the list that won't be on the list.
Why not? Just don't make the numbers?
They either don't make the numbers or they just don't want to. Some companies might not want to share the numbers even for analysis purposes.
Right.
I think that's rare. I think for most companies, they do want to be on the list, and there's quite a lot of excitement when the list comes out, as there is with some of our other flagship lists. So I don't think that's much of an issue, but I'm sure it's the case for one or two companies.
The amount of money that's going into these companies is reflective of the economy, but it's also reflective of the state of venture capital. I don't know if there's anything you've gleaned from that, since we're talking largely about VC-backed firms, are we not?
We are. They're all VC-backed firms. I think one of the things that's clear on this year's list, because there's less money going out this year, a number of the companies on this list have stockpiled cash from previously. So not all of them, but some of them, talked about, like Jellyfish, who I talked about before, talked about it. I believe they did their last round at the end of 2021 or maybe early 2022. And they had quite a lot of cash on hand. And there's other companies in that same situation where they kind of saw that things were getting a little bubbly. They stockpiled when things were good, and that gives them the runway to continue going when things are a little tighter.
So if we step back to the 30,000 foot view a sec, Amy, and you look at the trajectory of what you've looked at over the past 9 years, but also this specific year, there's a lot of paranoia about AI. There's a lot of enthusiasm. It seems to be on two extremes. What do you take away from the companies that are really succeeding and are the next wave of growth? Any lessons for leaders from what you've seen?
I think in a sense, this list is a little different. There's a lot of companies that are using AI, but not that many that are using the generative AI that people are very concerned about. There is one that is using generative AI to do legal work, regulatory filings, things like that. But a lot of the big controversies, these aren't necessarily the companies that are in the midst of some of the big controversies.
Right, and perhaps maybe those are so early on that they're also not the next billion-dollar startups. So,
or they've gotten so much funding that they're already at $1 billion because that's been the bubble right now.
The behemoth of the list. Anything else that you would point out just in terms of the trends that you're seeing, or even the submissions that you had? Any differences from previous years?
I don't know that it's different than previous years, but one thing is interesting. We look at the list, afterwards to see, and this year the companies on the list have 24 million average revenue. Some are much higher, some lower, obviously. That's about the same as last year, but it's double the year before that when the market was much bubblier. And they're doing that with a little bit less funding. They have average investment right now of about 100 million, little over 100 million, and that is down from previous years. So they're doing more with less, which is really a bit of a sign of the times.
Right, the economic cycle and such. Anything else in terms of what you've gleaned in terms of the people in charge? Because I'm always aware of the fact that we don't always see a lot of diversity among the behemoths. When you look at the leadership, do you see more of that in terms of the next wave of companies coming up?
We see more of it, but I would like to see still more of it. We do have on the list 6 of the 25 companies have female founders, 3 of them have female CEOs. About more than half of the company is founded by either Asian or Hispanic founders. We do not have any Black founders this year, which just kills me, but is reflective of where the money is going. There was a Crunchbase study earlier this year that Black founders typically get 1% of the funding, and that's down as funding has gone down. So we reflect what's going on in Silicon Valley, and I would hope that Silicon Valley would do better on diversity.
Great. Well, more to come, and thanks for giving us a taste of this, and hope people check out the list.
Thanks for having me.
Thanks, Amy.